Well, hi guys, welcome to this Moneycontrol live stream. You're watching a morning trade with me, Nandita Khemka. Well, we've kicked a brand new week on a rather subdued footing, given the fact that we saw a very sharp sell-off coming on Friday, and of course this morning as well, the gift Nifty hinting at a subdued start for the Indian markets. Lots of earnings to digest: Reliance Industries, ICICI Bank, Kotak Bank, Paytm, and of course among the key earnings to watch, Tata Steel. So we'll also be talking about all these stocks during the course of the show, and of course we'll also be getting all your stock related queries answered by a technical expert on the show. So if you have any queries, send them in to us on our YouTube feed and we will have them addressed. But before we go any further, let's take a look at the top headlines at this hour. Wall Street closes mixed on Friday. The Dow gains for a 10th straight session, while the Nasdaq closes lower as investors look ahead to the Fed meeting that starts tomorrow. Asian markets meanwhile trade mixed, while the gift Nifty is indicating a lower start for the Indian markets. Reliance Industries will be in focus after first quarter earnings. Retail business offsets a subdued performance in its oil to chemicals business as Reliance Retail reports strong quarter on record footfalls. Meanwhile, Jio posts a steady quarter as well. ICICI Bank's business momentum remains strong in the first quarter. Return on assets is at an all-time high, while asset quality is the best in 33 quarters. Kotak Mahindra Bank's net profit beats estimates in a good set of first quarter numbers. Deposit growth is the best in 16 quarters, while the return on assets remains robust. Retail loan growth, however, remains soft. In key earnings to track today, Tata Steel's realizations are likely to remain flat, while the street will be watching out for commentary on capex and debt reduction timelines. Also keep an eye out for numbers from SRF, HDFC, AMC and Canara Bank. And stocks in spotlight today will be Paytm as it narrows its first quarter loss on a YOY basis, and Tata Steel, of course, as it reports its numbers today, and of course a lot of other stocks as well that we will be putting the spotlight on during the course of the show. Well, let us get going and talk about, the markets as well as specific stocks. Then let me get on board our first guest for today, Anuj Gupta, who's the Vice President at IIFL Securities, joining in this morning. Good morning, Anuj. Good to have you on the show. Well, after Friday's sell-off, would you say that, the Indian market's date with 20,000 will get pushed a little later, and, the kind of earnings that are trickling in? How do you really look at the setup for the Nifty as we step into trade today?
Good morning, Nandita. Overall trend of Nifty, Bank Nifty and Sensex are positive, but on last trading day, we saw the subdued result from the Infosys and also, the subdued result from the Reliance. Maybe put pressure on Indian market, but we saw that also the good result coming from the banking side, and even the bank Nifty trend is positive. So I am expecting that that would be a nullify, and expecting again a positive trend may be seen in the equity market. But yes, definitely we are expecting some gap down opening in Nifty. But laterally, I am expecting that market may turn around from the support levels, and overall that overall trend is positive. But the banking, I am expecting that for today or for coming trading sessions, Bank Nifty will support the equity market. But still, if we check the technical point of view, market is little bit overstretched. On last trading day, we missed by 9 points to test 20,000 levels. So definitely market little bit on a overstretch, and we are recommending buy on support level. Still, prices are trading above 10 and 20-day moving average. So the trend of the Nifty and Bank Nifty are positive. So little bit we are expecting some correction to buy on support levels.
All right, that's the setup for Nifty, but let's talk about Reliance Industries. The company reported its earnings on Friday post-market hours. Of course, there has been weakness in the oil to chemicals business on the back of a sharp fall in crude prices, and the management has also said that, the near-term outlook when it comes to O2C business will remain a little subdued, given the fact that, we will be tracking crude prices on, when it comes to this business. But if you look at Reliance Retail, of course, record footfalls, healthy store, fast-paced store additions, profits and margins there have been extremely good. And Jio, of course, has already, has also clocked in strong subscriber additions as well. This morning, if you look at the brokerage views coming in on the stock, they're pretty mixed, with the Citi saying that, they have a buy rating, target price at 2,750 rupees a share. Key segments Citi believes have a softer near-term outlook, and that could prelude in fact, that could preclude, earnings upgrades. In fact, that could prevent earnings upgrades for the stock going forward. And if you look at JP Morgan, they have an overweight rating, target price raised, in fact, to 3,040 rupees per share. They believe that, operating performance has been steady and the downgrade cycle is likely behind RIL. In fact, they've raised the FY24, FY25 EBITDA estimate by 1.5 to 4% or thereabouts. But EPS estimate have been cut by 5.4 to nearly 3% on higher tax rate. They believe that the upcoming AGM, of course, will give more visibility on timelines as to, when Jio as well as Reliance Retail could make a debut on the bourses. And when you look at Macquarie, they have an underperform rating. They have a target price of 2,100. So brokerages have given a pretty mixed view on Reliance Industries. Of course, recently we saw the stock, come very close to 52-week highs. How would you approach the stock of Reliance Industries now after the first quarter numbers?
See, after the demerger of Reliance and Jio Financials, we saw that on last trading day, prices corrected by almost 3% due to the IT segment. But still, the overall trend of Reliance is positive. Little bit, it is an overstretch, so I am expecting it may correct little bit towards 2470 or 2450. So I think that would be the support level for Reliance, and I am expecting a trader who wants to buy, because if you see 2 or 3 days back, it was trading around 2800. Now it is trading around 2500 almost. So I think this would be a price for the traders who don't have the Reliance in their portfolio. So this is a chance to add Reliance in their portfolio on a discounted rate. So I'm saying this 2500 or 2450 levels would be the discounted rate. So because overall trend of you see then Reliance is positive. Numbers a little bit on subdued, but not I'm saying that these are not on a negative mode. This is a little bit on a sideways trend. So I am expecting that Reliance may trade on a sideways to positive trend. So we are recommending buy Reliance on a support level. Support level are somewhere around 2450, where I am expecting accumulation zone. So trader can add Reliance in their portfolio around these levels.
All right, so the overall trend for Reliance remains positive. That's according to Anuj, of course. But Anuj, before I move on to banking earnings, I would like to ask you as to how one should play Infosys now. Of course, we saw the tech pack emerging as the biggest culprit behind Friday's sell-off. Infy, of course, after the bleak guidance. Would you advise investors to stay away from this stock now? We have a query coming in on this stock from Hari Shankar. Wants to know what should one's strategy be when it comes to Infosys now.
See, if you see on last quarter, it was down by almost 9% and made a low of 1185. And after that, we saw a sharp recovery, and it recently made a high of 1498. So it means whenever price goes down, there is a buying opportunity. And if you see the technical charts, we are seeing that traders are ready to buy on support level. So I am expecting same here. At this kind of a time of moment, I am expecting that whenever price goes down, people will buy the Infosys, because the fundamental side and the strong of the stock is very positive, and still the technical chart structure is still positive. I am not expecting more correction in the Infosys prices. Maybe it may test 1250 or 1280 kind of odd levels. So these level would be the buying zone. So if somebody wants to buy Infosys, because the overall trend of the Infosys is positive, and I'm expecting again a buying accumulation on lower levels. So if somebody wants to buy Infosys on support levels, so 1250 or 1280 kind of levels would be the very appropriate level to buy or hold in the portfolio.
All right, 1250, 1280 would be an appropriate level to buy into Infosys. That's according to Anuj, of course. Hope that answers your query. But hold that thought, Anuj. We'll be back to you and talk about more stocks going forward. But let me also bring on board Neha Dave of Moneycontrol Pro to put into perspective, the banking earnings that have trickled in over the weekend. Good morning, Neha. Good to have you on the show. I was just looking at ICICI Bank's numbers. Business momentum is strong. In fact, return on asset is an all-time high. Asset quality best in 33 quarters. I think everything is, going for this bank. Would you say that this is the, better placed or best placed banks amongst the top private sector lenders in the country? How would you view the earnings?
Thanks, Nandita, for having me on the show. So ICICI Bank stellar run continues. The bank reported a very strong set of earnings. The advances growth was very strong. Most interestingly, there was a pickup in deposit growth. Till last quarter, we had seen that deposit growth was lagging the advances growth by a margin, but now there was a healthy pickup, and management alluded to the fact that the lot of deposit growth continues to come from the retail side, and it's not only wholesale driven. So that was a positive point. So as far as the key takeaways or the important or the interesting things from the result was, obviously everybody was anticipating the margin contraction this quarter as the cost of funds have increased for the banks, and they tend to increase the lag effect. However, the moderation in ICICI Bank's margins was lower than what was anticipated, and this was mainly because of the fact that the increase in the cost of funds was partially offset by the rise in the loan yields and investment yields. Now, this is very interesting aspect as to increase in the loan yields. And if we see how ICICI Bank's loan portfolio also has grown, there was a very strong or the robust growth, I would say, in the unsecured credit, which consists of personal loans and credit cards. That portfolio grew by 40% on a year-on-year basis. Now, obviously, the yields on this portfolio is much higher, and hence, that could compensate for increase in the cost of funds. Having said that, management already indicated for that the next 2 quarters they anticipate a rise in the deposit cost, and hence margins will come under pressure. So if I have to talk about the overall performance, obviously the highest return on asset the bank has reported. Going forward, what is likely to happen? Now, if we look at the margins, obviously there is some contraction that is anticipated, and credit cost, that is the provisions number. Now that is also at one of the record lows, and improvement from here onward seems difficult. So we anticipate earnings normalization going forward in FY24. Having said that, there is still the stock can still rally, and that would primarily happen because of the valuation re-rating. So if we look at the valuation of ICICI Bank currently, it is trading at around 2.1 times core book value after adjusting for its subsidiaries for FY25. Now, this is at a lower or attractive level, considering that return on asset is, say, even if you don't include this quarter's number, which is like 2.4%, return on asset is still very healthy at about 2%. So, the bank can command a valuation of more than 2.5, 2.6 price to book for FY25, and that would drive the valuation re-rating and the stock upside going forward.
All right. I also want to ask you about HDFC Bank. The bank has said that it is expecting credit growth of 17 to 18% this year. Of course, we've seen the merger take effect, and it's become the 7th largest lending institution globally. So what's your thought on HDFC Bank now? We didn't really get the chance to speak about earnings as well. How is HDFC Bank poised now?
So HDFC Bank, very interesting stage. Next quarter, they'll report the numbers of the merged entity, huge balance sheet now. Advances is close to 22 lakh crore on the merged book. So basically, what one needs to, or the street is anticipating, from HDFC is they need to see how the growth pans out on a huge balance sheet, because now the size is huge. And second is also the street want to see how the margins pan out post-merger. So on both these parameters, there is some skepticism, and that is the primary reason why the stock has been underperforming the peer group since the merger was announced last year. But if we look at what happened in the latest quarter, and especially what management indicated, that was a very important takeaway. Now, the growth and margins are the two important concerns of the street, and the management clearly indicated that they would continue to grow even on the larger balance sheet at 17 to 18%. Now, which is a very healthy loan book growth or the guidance which the bank has given. So that is taken care of. Now, coming to the margins front or coming to the operating cost, because obviously because of the merger, the margins are anticipated to decline as HDFC Limited mostly used to depend on the wholesale funding. And, the regulatory cost is also anticipated to go up post-merger. However, management, kind of gave a hint, in fact, gave a guidance that even after the merger, even after adjusting for the higher regulatory cost, margin compression, it will maintain its return on assets between 1.9 to 2.1% in that range, So now, again, that is a very good point, which means that the street currently is worried about growth and return ratios. It will be adversely impacted by the merger. However, the bank is confident that it won't be much impacted. They will continue to deliver the growth and profitability as before. Now, if that happens, the stock would continue to, it will get re-rated sharply because it has underperformed. So I think the street would wait for a quarter to see the performance, and we can see a good upside from for HDFC Bank.
All right. I want to ask you one last question. Of course, we knew that margins could come under pressure for some of these lenders, given the fact that deposits are still getting repriced. But what about expected credit loss? I mean, I was just going through Kotak's con call comments, and they've said that ECL for us would be a very small amount. But if you look at Kotak's performance, I think retail loan growth is still soft when it comes to Kotak. So, I mean, would you say that, these two segments will remain a point of concern for Kotak Mahindra Bank going forward?
As far as if we talk about the trend, I mean, it's common among all the large banks, be it ICICI or Kotak Bank, where, the growth, and then in fact, the whole banking sector, the growth has been driven by retail banking. And credit cost is at its low for almost all banks. It's RBI has indicated in the financial stability report that the banks are in a very good health as far as the asset quality is concerned. But yes, one needs to closely monitor asset quality and credit cost from here onwards. Improvement from this number on credit cost is unlikely. Now, what one needs to see is these banks have grown very rapidly or are growing at a very fast pace in the unsecured part in the retail. The personal loans credit card segment. Now, and this now constitutes a very good share of the overall loan book of the banking system as well as for the individual banks. So, for example, ICICI Bank, the unsecured credit constitutes around 13% of its total loan book. So, one needs to monitor the performance of this unsecured book going forward. And hence, which may impact the credit cost going forward. But as far as ECL provisioning and stuff is concerned, I think most banks also have given the indication, they are comfortable on asset quality front. Another important point one needs to understand that even if the asset quality deteriorates slightly or if the provision has to go up, banks are very comfortably positioned because they have created contingent provisions. Basically, so they can use this contingent provisions. They have been creating these provisions right from the time of pandemic, COVID-related provisions. And then because they are in a very good health, they have been taking some profitability out and creating these provisions. So at a very healthy provision cover ratio, and also because there is a contingent provisioning, I don't see any huge dent to the profitability coming from the credit cost side.
All right. That's the view then on some of these private sector banks. With that, Neha, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. Well, with that, let's go back to Anuj and talk about specific stocks. Before I move on to viewer queries, Anuj, I want to ask you your thoughts on Paytm, given the fact that, the company has managed to narrow its loss, Q1 loss on a YY basis. In fact, revenues have gone up nearly 40%, on the back of demand for loans. And, the management has also indicated that they could turn free cash flow positive by the end of the year. The stock, of course, has been doing pretty okayish. I think the general view on some of these stocks have turned positive. How would you look at a Paytm now, given the fact that, management has, of course, given color as to when they will be turning cash flow positive?
The overall trend of the Paytm is looking positive because currently prices are trading almost, you can say, a 2 years high level. It recovered from the low of almost 400 kind of odd levels. Latest is made a low of 441, and after that it made a high of 909. So overall the trend of the Paytm is looking positive on the charts, and definitely fundamentally market is going on a higher side of the Paytm. So I am expecting it may move further and it may test 1,000 kind of level in a very short term. So my view on Paytm is positive. So I am recommending buy on Paytm around 800 kind of level. Where stop loss would be 745, and target I am expecting 950 to 1,000 in 1 or 2 months. So overall trend of Nifty, Paytm is positive on the technical charts.
All right, overall trend for Paytm looks positive. Let's take up some viewer queries then. This one is coming in from Rupak Mehta, wants to know your thoughts on Tata Elxsi. He's sitting on a 7% profit and he wants to know whether he should be, staying with it or should he be cashing out, and if at all you advise him to cash out, what should he be putting his money in? If you look at the stock of Tata Elxsi over the last 5 sessions, it has lost somewhere around 6% or thereabouts. And, it is quite far from its 52-week highs. Should he take profits or should he wait it out and, wait for some upside to come in?
See, the Tata Elxsi trend is positive. Currently, is trading around 7310. On a last week, it corrected by almost 5%. So, I would like to advise hold with this stock, but still, he can use some trailing stop loss at 7050. So, he can ride on profit with the trailing stop loss. In last couple of weeks, we saw a sharp rally in the Tata Elxsi, and I'm expecting it may move further upside and it may test at least 8300. So my view is on Tata Elxsi is positive, so he can hold with trailing stop loss of 7050.
Well, hold call on Tata Elxsi. Hope that answers your query. Let's take up a query on Bajaj Finance then. Govind wants to know your thoughts, whether it's a hold or sell at the current juncture. Now, Bajaj Finance has staged a good comeback after last year's underperformance. In fact, the company will be reporting its earnings this week as well. So ahead of earnings, how should one position themselves in Bajaj Finance?
In last week it increased by almost 1.33%, and we saw a positive trend from the last couple of weeks. So the overall trend of the Bajaj Finance is positive, and now it is on the resistance level, and I'm expecting it may test this resistance level because overall trend in the Bajaj Finance is positive, and the technical structure is made the higher top, higher bottom formation, which indicate it may move further higher side. Initially, 8,000 level would be the resistance level, and in last week we saw that it made a high of 7,999. So almost it meets by 1 rupee to test 8,000 level. So 8,000 would be the next resistance level. So if somebody wants to buy, I think he can go for the buy on a dip around 7,500 with the stop loss 783.50. Target would be 7,800 to 8,000. If it stayed above 8,000 and able to close above 8,000 level, so I am expecting it may test 8,400 to 8,500. But that would be a long story. But still, the overall trend of the Bajaj Finance is positive. So I am recommending buy on dips around 7,500 with the stop loss of 73,550.
All right, those are the levels to watch out for on Bajaj Finance. Quickly take up a couple of more queries. This one is coming in on Aptus value. Arun Srinivas wants to know your thoughts he wants to know your thoughts on how to position themselves in this stock for the next 6 months or thereabouts. If you look at the stock in the last 1 month, it has gained somewhere around 10% or thereabouts. Would you advise a buy now? Anuj, is my voice reaching you?
Yes. The Aptus value is on a sideways trend. There is no, breakout or breakdown on technical chart. It is in trading in a sideways zone from from March to till date. So there is no fresh breakout. But still, in last to last week, we saw almost 14% kind of growth in the Aptus value stock. So if somebody wants to buy this stock, you have to wait for some correction towards 260 or 255 level. The trend is still sideways to positive, we can say that. So if it come around 260 or 255, one can buy this stock with the stop loss of 235, and I am expecting it may test 290 to 300 level. Still on a current timing, 300 would be the resistance level. If it's able to breach 300, then it may test 340 to 360 level. So slow and steady one can add in this stock in portfolio, and after 300 one can add more stocks in this portfolio, but still buy on dips around 260 levels.
All right, buy on dips is the call on Aptus value. I think we are running out of time. I'm afraid we'll have to wrap up the query segment here, but before I let you go, Anuj, what are your stock recommendations for viewers this morning?
I have 3 stocks which performed last week. One is from sugar sector, another is from banking, and another is from the auto sector. One is from the sugar, is Renuka Sugar. We saw a sharp appreciation in the Renuka Sugar prices. So one can add Renuka Sugar with the stop loss of 39. Target would be the 60. That is, little bit short-term call for 1 or 2 week perspective. Again, the PNB, as we have seen that the bank Nifty is looking positive, and generally we saw very good momentum in the PSU bank. So PNB, I am prefer to buy with the stop loss of 50. The target would be the 85. And on last week, we saw a very robust number of the Ashok Leland. So I'm expecting it may move further. So one can add Ashok Leland at current market price with the stop loss of 160. And the possible target would be the 220 in Ashok Leland.
All right, those were the stock recommendations coming in from Anuj for our viewers this morning. With that, Anuj, thanks a lot for taking out time and joining in and sharing your thoughts with us. And of course, also answering our viewer queries for this morning. Well, with that, we are completely out of time on this edition of Morning Trade. From me and the entire team that put the show together, thanks a lot for watching. Stay tuned to Money Control because coming up next is Opening Bell.